Now, let's practice how to create the flexible budget. We also call it the variable budget. We want to focus on the cost variance only because the actual level of activities can be different from the static budget. So we match it, the level of activity, the same level of activity, so that we can focus on only cost variances. So the static budget is just one of the flexible budget for a single assumed level of activity, which is the fixed, doesn't change it. But we want to match the sales activity level with this flexible budget. And then we also want to practice activity-based flexible budget based on the budgeted cost for each activity and the related cost driver, so that we can get the accurate result and the variances as well. So let's go to the exercise. Okay, first one is the flexible budget. The flexible budget for the month ended June 30, 2001. We use only one cost driver, which is the units level. You can see that the standard cost unit, the sales per unit, and the variable cost per unit, and the contribution margin per unit, and the fixed cost. The reason why we are using this standard cost per unit is that we want to measure all the flexible budget in a different level of activities, so that we can match the actual level of activities. Okay, so let's start. It's very easy when we use this cost, standard cost, times now the 7,000. Now I'm going to fix this $31 per sales unit. Okay, I'm going to use this with dollar sign so that you can see I can just make this total sales. Okay, also the same way, $21 per unit for the variable cost. Then I want to fix this, and then times 7,000. Okay, so we can make all these flexible budgets. In the same way, also we can use this. In this way, you can use times 7,000, then we make it. And then 0.2 administrative cost as a fixed, the dollar sign. We want to fix this cell with the dollar sign in front of the column and on the row. And then total variable cost is $21.8 per unit. So let's fix one more time. Then we're almost done. So the contribution margin, how do we calculate it? Right, the sales minus total variable cost. Then let's drag. Let's drag. Then the fixed manufacturing cost is not gonna be changing because it is the fixed cost. So I'm going to just drag to the right all this number, and then the total cost variable plus the fixed is 222,600. Then let's drag to the right. Then operating income, how do you calculate it? Okay, 217,000 minus this total cost. So we constructed this flexible budget for various levels of sales production activity. So 7,000 unit, we expect operating income operating loss 5,600. But the 8,000 activity, the level of sales, then we can make the operating income. Now let's compare the budget, flexible budget, with only one single cost driver, with this multiple cost driver based on the activities. We have the same conditions, and 7,000, 8,000, 9,000 flexible budget for the various levels. Processing, now the setup activity and the marketing activity, and finally administrative activity. Each activity has the cost driver its own. The number of machine hours, the cost driver, number of setups, and the number of orders for marketing activities, and number of units and administrative activity, so that we don't have to use the single cost driver of the sales in units. Okay, so let's go. This 31 should be now I'm going to just fix this 31 times 7,000, and then I'm going to drag to the right, so that we can use this $31,000 when I drag. Now the variable cost, now we are using the same way. We are using this variable cost in order to measure the variable cost in a processing activity using the number of machine hours. The cost of driver level is now 14,000 hours, machine hours. So I'm going to fix times 14,000 hours each level. So when we sell the 7,000 unit, and then cost driver of this process activity is the number of machine hours, we use this machine 14,000 hours under this 7,000 units sold, and then 8,000 units sold is 16,000 the hours, and 18,000 hours under this 9,000 the sales in units. In the same way, I'm going to fix this $13,000, which is the fixed amount. And then let's just sum up of these two, so that we will gather all this, the total variable cost and fixed cost on each activity together to get this total cost. Next, I'm going to use the same function of this 500 for the setup under the setup activity. Variable cost is 500, which is the fixed part times 20 now number of the setups for this setup activity. Now we use this new cost driver, and then the fixed cost is $12,000 for this, and then the total is the sum of these two, the variable cost and the fixed cost. And then let's drag to the right. The marketing activity, now we are using cost driver level with the number of orders. Number of orders is 350 on this 7,000 sales in units. So $12, we want to fix this cell, and then 350 number of orders, and then let's drag. This number fixed cost is going to be the same no matter how many numbers of orders the marketing activities the uses. Then the sum of these two, the variable cost and the fixed cost. Then let's drag. Finally, last one, administration activity, 7,000, 8,000, 9,000 number of units. Now this number administration activities involved into the number of units only 7,000, 8,000, 9,000. is total. Now that means the cost driver for the administration activity is now sharing the sales in dollars. So $0.2 per per administration cost, variable cost, times 700, then drag to the right. And then the fixed cost of administration expense is 18,000. Then let's drag. The same way, let's sum up this two and drag. And then total cost is again, now we found the total cost based on these four the different activities is 160 from processing and the setup activity, and then 19,200 the marketing, and then on the administrative activity. So we got it, the total cost. Then operating income can be calculated, the sales amount minus this total cost. So we complete. The reason why I didn't put the negative number in the cost part is that now we are going to compare the variances focusing on the cost. So in order to avoid some confusions, I just put a positive number. Okay. Now let's compare the result of operating income under this activity-based flexible budget with the single the flexible budget. So we have some different outcomes, different results. Definitely, the operating income under this activity-based flexible budget produces more accurate the information, because it segregates all these variable and fixed cost by the specific activities using the cost driver of its own. Okay, that's all. See you in the next video clip. Bye bye.